Howdy there, folks. Welcome into this 5-piece here today. Palantir CEO got interviewed here today. We're going to go ahead and react to this, watch this, kind of give my opinions and perspectives. I think this interview might ruffle some feathers out there. Some people might really appreciate this interview by Alex Karp here today. Then we're going to get into Nelson Peltz and Disney have been in a battle for quite a while. So looking forward to watching that one. And hearing what Nelson Peltz has to say about Disney. Does he view it as an opportunity still or not really? Then we're going to react to this little 2-minute clip here. Google cuts YouTube jobs to shift to AI, okay? And then we'll watch this little 1-minute clip and react to this on what's going on in the housing market. And lastly, we'll finish out with JB Josh Brown talking about it makes sense to be bullish right now in this market. I appreciate every single person for being here. Thank you for being subscribed, folks. We are at a new all-time high subscribers. I think we're at 37,600 plus, so I appreciate each and every one of you. Also, if you're a Palantir shareholder, let me know in the comments section what your price prediction is for Palantir stock at this time next year. So January 2025, where do you think Palantir stock is? Let me know in the comment section. I'm very curious to kind of hear how bullish or bearish or maybe neutral people are in regards to Palantir. Appreciate y'all, and let's get into this.
I started out by asking him about his recent trip to Israel.
The main reason I went is because we corporate leaders, especially corporate leaders who are running publicly traded companies, need to stop just parroting things we don't believe when it's popular and then being silent when it's a little more controversial.
What do you mean by that?
Well, we have all these, we had a movement I think is fading away, largely understood as wokeism, where people said, quite frankly, in public, lots of things that no one believed they believed in private. Now with Israel, most people in positions of authority realize that what happened on October 7th was one of the worst terror attacks the West has ever seen, arguably the worst act of terrorism and sexual barbarism the world has seen in 100 years. And it is incumbent on us to actually not only speak loudly in private, but occasionally show what we mean in public. And so core to defending the West for me was not just me going to Israel. I'm very well known there. Our products are used there. I'm proud of that. But bringing the whole board and saying, look, you know, you can debate lots of things about Israel, but the people who are attacking it are calling into question the very existence of a thoroughly democratic Western country that is defending our rights, and we cannot just speak loudly in private. And one of the key issues that you find, including here, is, you know, people want to talk about rebuilding trust, the elite. No one trusts the elite. Yes, but how could you trust the elite if everything you're saying is a half-truth at best?
You ran a full-page ad in the New York Times after the tragedy that we saw in Israel. You were the only company that I saw do anything like that. What was the reaction to that from your fellow CEOs?
Look, there are a lot of people who are like, you're beep, beep crazy. You're going to get in a lot of trouble. People are going to call up and yell at you. And my reaction to them was, is never again mean I never take the risk of my own career. Is like, it was always hard in history to stand up against discrimination, brutal acts, pogroms, sexual violence. We are at the point where you have to stand up. And, you know, the interesting thing is, in private, a lot of people agree with me. Their position is, but you can't say it in public because you'll offend someone. And this is exactly wrong. You can no longer live in a world where you are not saying something that will offend, you only say things that will offend no one. Like, if you're going to defend something, you have to defend it.
But then what's your view about companies that were speaking out on lots of other social issues that I think you don't think that they believed in?
So the core reason why people who are basically decent, wonderful people in America have basically no trust in the elite is everyone senses that they spoke out on things they actually don't believe in, and they set a precedent. The precedent that they set was, I'm going to speak out about moral causes. Okay, now you have a crucial moral cause. Like, you can be against what I'm saying. You could be against standing with Israel. You can't say you don't have an opinion. You don't have an opinion on this. You have fallen on your head. And if there are people in corporate America who say, look, I never have an opinion. My opinion is the shareholders. I actually am sympathetic with them. But if you spent the last 5 years lecturing us about all sorts of things that no one believes you believe in private, you can't just wake up the next day and say, oh, I can't speak about this thing I believe, or say I have no opinion. And
I think that's fair. A lot of companies want to speak up about a lot of issues, and then, they're silent on other ones. It's like, if you're going to speak up on, a lot of issues, you better be there for subjects like this, right? Even when it's tough situations. That's the bottom line with that. If it's somebody, Alex Karp says he respects, like if somebody wants to stay out of everything, right? But if you want to just, pick and choose your battles, that's where it gets tough.
Crazy ridiculous, and it undermines the fabric of our democracy because no one believes it.
Let me ask you about what's happening here in Davos, because one of the conversations that we have not seen in large part is one about what's really happening on the ground in Israel, a conversation about anti-Semitism, the same conversation that's happening in institutions all over the world, but it doesn't seem to be here yet. It seems so very limited.
Davos has an important function. I live on a different planet. Like on the planet I live in, climate is important, fighting bigotry of all kind is important. The most important issue of our time is war and peace, and the absolute most important metaphor for that is, what do you think about what happened in Israel? And by the way, anti-Semitism as a kind of prejudice has always been the canary in the coal mine for your society isn't working, your university isn't working, you're not providing real growth to your population, and because you're not explaining why it doesn't work, you just go blame the Jews. And so, like, any enterprise that's about making the world a better place that doesn't deal with these issues is basically saying, I'm not really engaging in the problem. And this is not just a problem here, it's a problem with all sorts of institutions, from our higher education to fake discussions in corporate America to international conferences. And I don't know why it falls on me to say the obvious, but this is obviously just shows you're not talking about the real problem.
Can you speak to your recruiting efforts and how you're changing them in terms of where you plan to recruit people from and how you think about what used to be the most prestigious schools in America?
Look, Palantir, in all modesty, has been way ahead of the curve. We test everyone. You went to Harvard, we test you. You went to University of Colorado, you went to go to community college, we retest you. In the 50s in America, if you were a Yale degree, a Yale alum, and you got retested, you'd be offended. The legitimacy of our institutions is so much weaker. Everybody's going to move to our methodology. You have to retest. Until we reform our institutions, I don't know what a grade is. I know what our test is. And
when you say reform our institutions, what does that mean?
Look, across democracy in the West, we have a large focus on what we pay, not what comes out. In tech, we have an absolute myopic focus on what comes out, not what goes in. And our institutions have to move from what did we spend to what did we get. And that's very, very scary because the outcomes are unfair. And that's why I'm actually still a card-carrying progressive, because we have to take care of the people who are not going to benefit from the AI revolution, who are not going to participate, who need remedial help. But the reality of what the West needs to do in every institution is, it does not matter what you spend. It matters what you get. And by the way, if there's one lesson of software, the single thing that America does better than any other country, it's not input, it's output.
I didn't really want to interrupt Karp there much because he was just kind of going off there, and I'm sure a lot of people definitely appreciate that. Real quick here, at the end they were talking about hiring, and they were talking about Palantir. So what I've personally heard out of Palantir's hiring process is I have heard that it is extremely difficult to get hired at Palantir. From what I heard, it's been more difficult to get hired at Palantir than it is even, the Googles and the Metas and those sorts of companies. So from what I heard, people that get hired to these other big tech companies, a lot of them can't even make it out of the first round with Palantir. So that's what I heard. Obviously, I haven't been through the process with Palantir, so I can't tell you what, personally, but that's what I've heard from several different folks now at this point in time. Next one up here, Nelson Peltz in Disney. This should be interesting.
Deja vu, because we had this conversation with you a little over a year ago when you were trying to get on the board, and
Disney parks need more capital. Competition's getting stronger. Ooh.
You decided not to, and they're saying the same thing they said then too, which is they question the relevant experience that you have in terms of the entertainment and media business and why you would add anything. They of course say that they have an incredibly well-stocked board of people who are fully capable of.
Peltz says Disney's not being run properly. Board oversight is awful. Ooh, okay.
The management team accountable. And again, what's the plan? Other than saying they got to do better, what's the plan?
David, you asked it just like I wanted you to. I mean, as written. First of all, this board, from Bob to every independent director, has underperformed the S&P on every measure. 1 year, 3 years, 5 years, 10 years. How much more do we have to go? How long do we have to continue to suffer with this great board? By the way,
And by the way, you know, with a stock like Disney, people expect it to outperform the S&P 500. It's flipping flapjack in Disney. So when you underperform on a 1 year, 3 year, 5 year, and 10 year basis, ooh, and it's not like it's small underperformance. It's pretty huge.
I have no media experience. I don't claim to have any. But I would tell you, I don't think they have much media experience. They broke a record this year. You know that the last 5 movies in a row were losers. Now, if that comes with media experience, I want a guy who doesn't have a media experience. So, David, let's deal with facts. The company has underperformed. I made a run at them last year. They promised they were going to improve things. I took them at their word. Things got worse. The stock went down. Results got worse. Okay, so no more. I can't continue to give them more opportunity.
Ooh, look at that chart, folks. Look at that chart. Oh my gosh, Disney on a 5 year basis versus S&P 500. Disney's down 18% the past 5 years. S&P 500 up 77%. So once again, like I said, it's not like it's a small underperformance. This is epic. And once again, Disney's a stock that should outperform the S&P 500 over time because it's flipping flapjack in Disney. It's such a great historical company. And the fact that they're underperforming this much, oh my gosh. I mean, we're talking that's like 95 percentage points of underperformance in the past 5 years versus S&P? Come on, man.
Understood. Although, to be fair, don't you need to be fair to compare it to the overall entertainment group? I mean, this is a unique period in time in which, as you well know, there are headwinds and changes that are generational in terms of trying to deal.
Oh, stop it. Look at the Barbie movie. Barbie movie is one of the top grossing movies in history that they put out this summer. Look at the Oppenheimer movie. Not even, the Oppenheimer movie, I mean, that movie put up huge, insane numbers. And that wasn't even like traditionally a movie you would think would put up huge numbers. And it did, right? So, the fact that Disney's put out 5 straight bad movies that are money losers, as Nelson Peltz puts it, there's no excuse for that. There's plenty of movies that are super successful.
Move to direct to consumer and make it profitable. So, comparing it to the S&P may be a bit unfair, don't you think?
Oh, really? I mean, that's what shareholders who buy stock compare it to, David. But that's a good point. I mean, look at Netflix. Netflix last reporting period did $30 billion in sales, 20% margin. Okay, then you have Warner's. They did $30 billion in sales and media with a 20% margin. Disney, the big daddy, did $50 billion in sales, a 6% margin. Now, that's the competition. Those are the guys who are all suffering through a change from features to streaming. Some have been able to cope with it beautifully. Plus, this company, Bob said it in 2015 and 16, that streaming was a real issue. It was coming. It was going to continue to grow. He said that back then. And then what happened? They did nothing. And look what happened to ESPN. The crown jewel of Disney continued to lose subscribers, lose value, and now they're negotiating deals for ESPN out of total weakness. They could have made deals on ESPN in 15, 16, 17, 18. When they saw this streaming thing coming, they said it directly. And did nothing about it.
They did miss that. But we do get a kind of a flavor of what Disney feels about the person you'd like to have on the board beside you, Mr. Rizzullo. It does sound like he was a stalking horse for the largest shareholder, Mr. Promoter. I don't find that wrong, but they do make it sound like that's something wrong there, and that Bob Iger broke Mr. Promoter's heart when Mr. Rizzullo was basically fired, passed over, I should say. Does Mr. Rizzullo, is he better than, say, does he know more than, say, James Gorman about the entertainment business?
At Disney?
Yeah.
For sure. I know James. I don't know how many times James has been to the park. I don't know what experience James has with Disney. And oh, by the way, James, who I like very much, was given a board seat. He didn't have to have a plan for the company. He did not.
Do you have a white paper that I can see? Do you have a white paper that I can see?
Oh, there. He didn't have to set a goal for the company. He got invited on the board. Okay?
Yeah, he did.
And I've got to go through these bells and whistles. Hey, guys, I'm the largest shareholder in this company. The largest independent listen to me.
I want to come back to that for a second, Nelson.
Shareholder in this company.
But are you? I mean, Perlmutter is. I still don't fully understand.
Really? Let me ask you
Let me ask the
something.
question. Because I am curious about this from a fund perspective. Right, you know, 25+ million of the shares that you are voting, so to speak, are Ike's, and then Trian owns, my understanding is 7+ million. What's your relationship with Perlmutter? Is he paying you? Are you getting fees somehow? Like, you're doing an awful lot here that really wouldn't seem to actually add the economic value for Trian holders, given your relatively small ownership of Disney when you take out Perlmutter stock.
David, I am thrilled you asked that question. Okay? Thrilled. Okay? Because every fund around has investors. Whether it's a pension fund, doesn't make a difference. Whether it's a sovereign fund, and whether it's a bunch of individuals. What the hell's the difference? It's money. These guys want to make money. That's why they give money to funds. We just saved one step. Ike Perlmutter gave us some shares. He said, hey, guys, you figure it out. I don't want to come back to the company. I don't want to be an officer. I don't want my job back. Okay? I just want to make money on my stock because, oh, by the way, when I'm gone, it's all going to hurt.
Right, but that's not Trian fund money that went into buying his stock. You didn't buy it from him. He's lumped it in with your ownership stake.
David, what's the difference if a guy gives me a check or he gives me shares? I have the full right to vote it, to do whatever I want with it. What's the difference than if CalPERS gives me $100 million or they give me shares in a company? There's no difference. It's all under my control.
Fair. Put Nelson Peltz on the board. I will say that, they should. They should. Disney's been a mess for years. It's not like it's a new mess. It's been a mess for years. They've got a lot of things to fix around there. I would want somebody passionate like a Nelson Peltz on the board. I think he would be the best thing. I think he would kick people in the butt a little bit. I think Disney should put him on the board. That's my personal opinion. But yeah, we'll see. But I absolutely think he should be on the board. Google cuts YouTube jobs to shift to AI.
Reportedly cutting 100 employees at YouTube, and he warns more are coming this year. That's the focus of today's Tech Check with Deirdre Bosa. Dee.
Hey, Leslie, good morning. So Google was criticized for moving too slowly during the year of efficiency, but this year, no mega...
That's a nice top. I would rock that right there, man.
Cutting as much and as quickly. Units affected, they also include hardware, engineering, ad sales. So far, last night, CEO Sundar Pichai told his workforce to expect more cuts. Yet, Wall Street's response this year, it has been lukewarm, perhaps because analysts and investors, they have been calling for more over the last year, while other mega caps like Meta and Amazon, they were cutting their workforces on an absolute basis. Google simply slowed hiring. But here's a question that I've been asking myself a lot recently.
So what are we seeing? We're seeing, before we get to the rest of that one, we're seeing Twitch just cut a bunch of jobs, right? We're seeing YouTube cut jobs. What does it tell you? It tells you people's attention is definitely being diverted to some other places, right? Where are those places? Well, TikTok. Where else? Instagram, Facebook. Facebook Reels type product, and then obviously Instagram Reels has stole away a lot of market share away from YouTube and Twitch. And so, Yeah, man, that's and who knows? Maybe X is taking some as well, because X seems like they're getting a lot more into video-related content. So there's a potential maybe X is taking some of that, and Elon's starting to actually grab some market share. But it's clear it's gotten a lot more competitive, and I don't love it. Obviously, I prefer long-form content over a lot of the quick type videos that these other services have, whether it's X or TikTok or Instagram or things like that. But it is what it is, and so you have to make adjustments.
Hey, what if Google's layoffs are just the latest ones? They're just the beginning of an entirely new trend. Rather than playing catch up or correcting post-pandemic, this is actually Google getting into position for an AI platform shift that will require a different kind of workforce. Pichai's memo to employees supports that idea. He wrote, quote, "The reality is to create the capacity for AI investment, we have to make tough choices. And for some teams, that means removing layers to simplify execution and drive velocity." Take a look at this chart. Despite the Wall Street narrative that Google has been slow to cut its workforce, it actually became more productive than those of Microsoft, Amazon, and Meta from 2018 to 2022. It increased revenue per employee at a better rate than the others. Now, if it is...
Yeah, but that's old news. That was to 2022. We're in 2024 now. At this point in time, the game has changed.
On AI efficiencies, Google's workforce, it could stay ahead. But guys, I also don't want to underplay the human aspect of this. I have heard from employees at the company who are anxious and wondering if their division is next. And I thought this was interesting. Axios put this trend another way this morning quite succinctly. They wondered if the year of efficiency made me do it has made way for AI made me do it. And that would be the new justification for layoffs. We're going to discuss more of this on the Tech Check podcast today. Producer Laura Batchelor will make her debut on the pod. And the layoffs, guys, they just continue to roll in this year beyond mega cap. And maybe this is an entirely new wave. We could see more.
I mean, it happens quick, folks. I mean, it wasn't that long ago. It was only 3 years ago that, these employees had all the cards in their favor, right? And they had all the cards in their favor for 15 years, to be quite honest. All the way back to kind of, we could even go back to like 2005, all the way through 2021. I mean, they could demand almost whatever they wanted for salary, $300K a year, $400K a year, $500K a year, plus stock benefits on top of that. Plus all these perks of like, I want a foosball table to play on, and I want my food cooked right at the place, and all these massage and all this stuff, right? And they had a lot of they had all the leverage for a bit there. And the leverage is being lost. It's been being lost for about 2 years now at this point in time, and it's still continuing to be lost. And it's going to get super competitive just like every other industry. And the best of the best will rise to the top. They'll make the big money. Everybody else will lose jobs or have to take much lower salaries. That's just the bottom line with that. So, yeah, man, it happens with every industry. And people thought it couldn't happen with folks that might be engineers or software developers or whatever. It happens to every industry. It just takes time to get there. And then eventually it happens. And then everybody's like, whoa. Wow, every industry always gets commoditized. Next one up here, a little 1-minute clip. Single-family housing starts. Ooh, falling.
And for that, we'll go over to Diana Olick, who's got the numbers. Diana.
Well, David, both housing starts and building permits came in a little better than expected in December, but let's break out single family as that's where we have the biggest problem with supply. Single family starts were down 8.6% compared with November, wiping out a lot of the big November gains. They were up about 16% compared with December of 2022. Now, that monthly drop is surprising given how much demand there is in this space due to the shortage of existing homes for sale and given that December was actually the warmest on record for the month. So in addition, builder sentiment rose in both December and January because of the sharp drop in mortgage rates into the 6% range on the 30-year fix. Now, multifamily starts were up 7.5% for the month, offsetting single family, but these numbers are more volatile and those starts were down 9.5% from a year ago as a record number of new apartments come online this year. Building permits, which are an indicator of future construction, were up 1.7% for single family month to month, up almost 33% year over year. Still, we might have expected that number to be a little bigger, again, given what some of the larger builders have been reporting about demand. Builders did say in the sentiment report yesterday that they're still facing headwinds on the supply and available land and labor and the costs of materials. Leslie?
I still think we're getting way overbuilt in the United States of America. Homes, apartments, everything like that. I just think we are. I think we are, man. Just common sense is what it tells me that. You look at the numbers and you look at household formation, you can make an argument that, we need more housing and all these sorts of things. It's only been like that because the economy has been so good for 10 plus years now at this point in time, right? As soon as the economy gets weak and we see big job losses again, all of a sudden everybody's going to go, whoa. We didn't need all these homes. We didn't need all these apartments that we thought we needed, because when times get hard, people move in with people. It's what happens, okay? So that's when everybody will come to that conclusion. Just like, no one was really saying we were overbuilt in 2006. They thought it was just okay. And then all of a sudden, what happened? We are way overbuilt. Home prices dropped 50%, right? You could get apartment communities in a lot of, big markets like Phoenix, for instance. I mean, gosh, they were like half filled at that point in time. People were like, where'd all the people go? Like, what happened? That's when you come to the reality. But when you're at 3% something unemployment rate, you're not going to get that reality. It's when unemployment goes to 5%, 6%, 7%, 8%, 9%, 10%. That's when the reality hits that you're way overbuilt. Next one up here, JB.
Whether investor sentiment has just gotten too bullish. Let's ask Josh Brown. He's Ritholtz Wealth Management CEO and a CNBC contributor. He is with me here at Post 9. It's good to see you. Welcome back. You think that's the case? We got all bulled up because of the way we ended 23. We came in here and thought, hey, this could be smooth sailing, and maybe not so much.
Let me answer your question with a question.
Yeah.
Do you think the market goes up because people get bulled up? Or do people get bulled up because the market went up?
The latter.
Okay, I agree with you. Why wouldn't investors be bulled up? Did you see the way that market ended last year?
Sure.
It literally ended like the 4th of July. It was picnics and watermelon and then fireworks. And I don't know if you were an investor, what more you could have wanted to see. The VIX was just vol smashed almost to zero, and everything went up. Of course, people got bulled up. And that's quite all right. They should. I'd actually think there'd be something wrong if we had an S&P 500 finish the year up 25%, NASDAQ up 50%, and nobody was bullish. That would be problematic.
Yeah, but it's one thing to get all bulled up on July 4th. It's another thing to be all bulled up in March because you're waiting for the fireworks that may not go off yet because they're not supposed to go off yet. It's kind of what Jamie Dimon was talking about today out in Davos. I want you to listen to what he said about this idea.
I always listen to Jamie.
Market goes up and everybody gets bullish. Well, maybe that's a little too much. Listen.
I think it's a mistake to assume that everything's hunky-dory. And, and when stock markets are up, it's kind of like this little drug we all feel. Like, it's just great, But remember, we've had so much fiscal and monetary stimulation. So I'm a little more on the cautious side, that we are facing a lot of things in 24 or 25.
I mean, maybe we're coming to grips with what we're facing. Maybe rates aren't going to be straight down. Inflation's not going to be straight down. Growth's going to be a little lumpy.
So I actually prefer my risk manager to speak the way that he does. Mm-hmm. I would be terrified if he were on the air saying, guns blazing. Let's have another breakout year like we had last year. That's not what he's supposed to be doing. Okay, this is the head of the largest deposit institution in the United States. It's a bulletproof bank. It should be a bulletproof bank, and the reason it is because Jamie Dimon is a risk manager first and foremost. That's his job. I'm glad that he's speaking that way. I hope most people are. That being said, what we're experiencing right now is exactly what you should expect after a rally as blisteringly hot as the one that we just had. So I want to walk you through a couple of things that we're looking at, and this is what we're talking to clients about. Okay. The first is the correlation between the VIX and the 10-year is at its highest level since 2018, back when the scariest thing in our lives was the trade war. Remember the trade war? That was fun. Okay. Anyway, the low point for this correlation was actually March of 2020 when it became apparent rates were going really low and not moving for a long time. Now we're back at a high of almost a 6-year high in that correlation. All that's telling us is that markets are getting a little bit shakier, but for the right reason. If you're seeing that 10-year note yield climb, it tells you that we are further away from the Fed looking to take policy down, and stocks don't love that, and that's perfectly fine. If we were selling off for any other reason, I would be singing a different tune, but that's really all that's changed. Nothing else has changed. We're back in an earnings season. So far, so good. The banks all had great things to say. We've got a lot further to go, but we are not experiencing a sell-off based on a risk to corporate profits. So it could happen. It's just not the story right now.
What about the idea that we may be too bulled up on sentiment? we may be too bulled up.
That's curing itself. It's curing itself.
The idea of all these interest rate cuts, and maybe most of all, that we're looking past a valuation that is stretched well beyond the historical average for all three of the majors, and that's what Aswath Damodaran yesterday, the so-called dean of valuation, said. The S&P's value overvalued in his mind by 9 to 10%.
But that has nothing to do with what's going on this year, and here's my proof. The worst performing sector, small caps, are the lowest valuation. So that is not what the issue is.
That's true.
Small caps are now down 6% on the year.
100%.
They finished the fourth quarter with a 14% rally. Almost all of it happened in the last 6 weeks of the year. It's a little bit of a give back.
100%. Now, does this mean small caps are doomed for this year? And the answer is absolutely not. Small caps still could have a great year. Russell could be up 20%, 30% by the end of the year. Obviously, Tom Lee's kind of in the 50 to 60% camp. I'm not that bullish on smalls, but don't count smalls out just yet for the year, just because they got off to a rough start. That doesn't mean they can't, climb back immensely for the remainder of this year, okay? Alrighty, guys, appreciate y'all joining me as always. Thanks so much for being here. If you're looking to apply to join my private stock group, get access to all my best courses, access to my 6- and 7-figure Discord chat, access to see how I build a portfolio, all those sorts of things. Check out the pinned comment down there. You fill out an application. We see if we can get you in there maybe this weekend or next week, all right? All right, guys, much love as always, and have a great day.